Did you know that the car market in the United States is bankrupting Americans? Because I want to talk about 5 different warning signs that we can take a look at right now in the US car market that shows you how completely unsustainable things are. And coincidentally, it's just as unsustainable as the US housing market. So this situation parallels the situation with real estate. And right now, the automotive industry is facing unprecedented challenges, and there is likely going to be a huge price correction on the horizon given all of the data that we are about to discuss. And just like with real estate, and just like with other types of debt, the amount of money that people owe on the cars that they own right now is at record highs. It's at about 1.7 trillion. And if we take a look at this chart just going back to 2019, which really wasn't that long ago, you could see it was 1.2 trillion. So it has risen $500 billion over the past 5 years. And if you're somebody that is planning on buying a car in the next year or two, this is for you, because you need to understand the state of the market and what's likely going to come down the pipeline. Now, arguably one of the largest problems that we had in the car market, and one of the reasons why we're in the situation we're in right now, is because of all of the dealer markups we saw during the pandemic. In January of 2022, about 82% of American buyers paid above MSRP on a car. Think about it, guys, 82%. And I've heard some people say, well, they didn't have a choice. If you wanted to buy a new car at the time, that was the situation where you were in. Well, newsflash, nobody ever has to buy a brand new car. You choose to buy a brand new car. So to sit there and say that people didn't have a choice and they had to spend 80% over MSRP on a brand new car is just a giant excuse for people that were financially irresponsible. Now, not everybody paid 80% over MSRP. The markups were anywhere between 10% and 80%. Okay, one of the most common ones, which is kind of ridiculous considering it's not even an amazing vehicle, was the Ford Bronco during this time. Okay, the MSRP in 2022 for that Ford Bronco was $38,000. Dealers were marking that vehicle up an additional $45,000, and it was actually selling for about $83K. Can you imagine you bought a Ford Bronco back in 2022 for $83K, even though the MSRP wasn't even $40. Imagine what it's worth right now, which is something we're going to get into a little bit later in this video. And so the next piece of this puzzle is the financing part of it. And this is part of the reason why all of it's starting to unravel right now. Because people who wanted to finance a vehicle between 2021 and 2023 are now facing some pretty severe financial repercussions because of it. About 25% of vehicle trade-ins have negative equity, with buyers typically owing almost $7,000 more than their vehicle is worth. This is something I have covered a few times since this news story first broke out last year, and that is just a staggering number, guys. To come to a dealership, bring your car in, and they say, well, this is what we're going to give you, and it's not even enough to cover your loan. By the way, you're going to have to pay us $7,000 in order to trade this thing in order to satisfy your loan. Huh? Who's got that kind of cash right now? Not many. And to make matters even worse, prior to the pandemic, you could finance a brand new car with an interest rate as low as 1 to 3%. And then it skyrocketed up to 6% for new cars. And for used cars, it's even higher. And so many people who bought these cars now are sitting with a monthly car payment of about $750 a month, and 1/6 of people who bought a brand new car during this time frame are now paying over $1,000 a month. So it's no surprise that because these payments are so high and people thought they could kind of swing it at the time, and that was before inflation really kind of kicked everyone's ass. Well, look at this now. You can see the delinquency rates on auto loans is also starting to skyrocket because of this. Before the pandemic, delinquencies were at 4.5%, and it has been steadily on the rise since then, and is now sitting at 7.5%, probably going to keep climbing, guys. So pretty soon a lot of these people are going to get to meet the repo man. So this situation, combined with all of the car manufacturers across the world amping up production to try to meet the shortfalls that we had during the pandemic, because since the entire global economy was on lockdown, we had a semiconductor chip shortage. And since cars are basically computers on wheels, that was a problem. So a lot of these manufacturers rushed to produce as many vehicles as they could over the past several years. And you combine that huge amount of production with all of these people who are now essentially losing their cars because they can't afford them anymore, this brings us to the inventory problem. As of the end of 2024, unsold inventory levels have risen 120% since 2023. So vehicle inventory on the car lots have gone up 120%, guys, in the last 2 years. Think about that. We haven't even seen increases like that on the housing market. So this car market crisis is even worse than the housing market crisis. And in 2022, to put things into perspective, there were times when inventory levels were as low as 18 days worth of inventory on dealer lots. So this is what led to the dealer markups and them charging way over asking price, just like people did for homes. A shortage of supply and an oversupply of demand. And now you see all of these dealers pretty much putting forth any incentive they can to get these cars sold. You know, they're offering you employee pricing. They're offering $15,000, $20,000 discounts off of MSRP. And it's still not enough to get a lot of these vehicles sold because now, fast forward a couple years later, people are broke and nobody can afford to pay $50,000 for a brand new car at a 7% interest rate. So now what's happening is the entire auto industry is in panic mode because you have these large car manufacturers laying off thousands of people like Nissan and Ford, and even GM has mentioned that they're going to be cutting back production on a lot of their vehicles recently. And Nissan in particular saw a 90% drop in its profits and a 20% cut to its production line, which is a huge signal of distress to the industry, which indicates potential systemic issues that could lead to broader market corrections later on, which we're already starting to see right now. The correction is taking place because you have all of these vehicles piling up on dealer lots. They're not selling. So what are they going to do? Are they going to give them away for free? Of course not. They're going to have to continue lowering the prices. But the problem is a lot of these dealerships are not allowed to lower the prices past a certain point without the permission of the manufacturer. So at some point, the manufacturers are going to have to step in and say, yeah, we're giving you special permission to offer these vehicles at 40, 50% off, whatever it is, just to get them sold. So we're looking at a time over the next couple of years where it could actually be a fantastic time to buy a brand new car. And then, of course, we had the recent announcement of the tariffs on all imported autos, which is a 25% tariff that is going to raise vehicle prices by a minimum of 5%, which puts additional pressure on an already strained market. Right now, the U.S. International Trade Commission is predicting a reduction in imports by about 74% if the tariffs stay in place. So we'll have to see, because it just kind of happened a little over a week ago. So we got to see how long these tariffs are even going to stay on, because one day they're on, one day they're off, one day they're different, one day they're whatever. And like I mentioned just a minute ago, General Motors is also a company that is seeing a slowdown in vehicle sales like everybody else. And they say they're going to temporarily halt a Canada assembly plant because of low demand. Just this past Friday, they said that they're going to be halting production and cutting staff at an assembly plant in Ingersoll, Ontario, because of lower than expected demand for its electric vehicle deliveries. Okay, they specifically called out electric vehicle deliveries being lower than expected demand. I wonder where you guys heard that one from before. But no, everything's all good with EVs. Everybody wants one, right? Yeah, keep telling yourselves that. Even GM Canada came out and said, yeah, this isn't even because of the tariffs. It's just because people don't want the electric cars. And they're specifically talking about the Bright Drop vehicle, which I've never even heard of. I didn't even know that was a car that GM offered now. But anyways, people are losing their jobs over this, guys. That's the part that you really need to understand. And you also need to understand that a lot of those electric cars that nobody wants are sitting on dealer lots unsold. So this temporary halt in production is going to be in place at least until October of this year, which they're going to take a wait and see approach and see how things go by the time October rolls around to see if they're going to be ramping up production once again. But in the meantime, 500 people are going to be laid off and losing their job. So there's that. And if you are somebody who's going to be getting laid off right now, if you find yourself in the crossfire of all of this economic madness right now, you need to be preparing yourself for that situation. I've kind of talked about this a little bit here and there in prior videos, but I just want to give a quick refresher for anybody who might have missed that. So one thing that you can try to do is, if you know you're going to be getting laid off, especially from a place like this, is negotiate your severance pay, okay? In the United States anyhow, about 25% of workers are entitled to severance pay after they're laid off. And basically what severance pay is, it will pay your weekly salary for a certain number of weeks after you lose the job. So it's definitely worth trying to negotiate a severance pay if possible. Usually this is paid out in one lump sum, and this will go a long way to helping you make ends meet. And the very next thing you should be doing after you get laid off is you need to be filing for unemployment, okay? Now, you're not gonna be getting your full pay if you're on unemployment, but it is something in the meantime to help supplement your expenses. And usually there's a time frame, so you have to do it right away. Usually you have to do it within the first week after you lose your job. So it's imperative that you do it ASAP after you are let go. And the other reason to do it right away is not only because you have to if you want to get the benefits, but it takes a couple of weeks for the benefits to kick in. You might go a couple of weeks without getting any money. The next thing you might want to do is also look into your health insurance options, because unfortunately here in the US, too many people's health insurance is tied to their job. And when they lose their job, it also means that you lose your health insurance. So you want to look into this and see if you're able to get health insurance through the health insurance marketplace, which is essentially Obamacare. I think the website for that is healthcare.gov. And this circles back to the reason of why you want to have a healthy emergency fund. In fact, just the other day in one of my videos, a lot of the experts are now recommending you have a 12-month emergency fund with how volatile this economy is. And I would agree, guys, because you don't know how long you're going to be out of work. You know, the average person, once they lose a job now, it's taking them 6 months to find another job. That's already 6 months of living expenses completely eaten up right there. And then if there's any other unexpected expenses during this layoff and finding a new job transition, you're going to need that extra money. So it's better to have it and not need it than to need it and have to get into debt because you didn't have it. And in the meantime, while all of that is going on, you have a set of people out there who are back to doom spending because of the tariffs. Everybody's freaking out and people are, buying up anything and everything they can because of the tariffs. Everybody's terrified of the impending doom with the price increases. And funny enough, guys, this is not something I'm worried about because I just don't believe it. I believe it when I see it. Here's the deal. The tariffs that were implemented, a lot of them have been reduced or have been put on pause already, right? And why is that? It's because the Trump administration saw the stock market was taking a nosedive during this time frame when the tariffs were on. And so just a couple days later, they announced a 90-day pause, and they just kind of, have been wishy-washy and back and forth on all this stuff, right? And what happened? Stock market shot back up. Not back to the levels where it was before, but it did see a sharp increase. So the Trump administration has already sort of tested the waters with the tariffs and have realized the type of devastation that's going to cause to the market. And there's a lot of powerful people that have a lot of influence that don't want that to happen, right? And so the likelihood of these tariffs coming back that are on a so-called 90-day pause is slim to none, in my opinion. I don't know. That's just what I think is going to happen. My guess, you don't have to listen to some strange dude on YouTube tell you this, but that's what I think is going to happen. Because if they were serious about it, why put them on pause? Why not just keep them in place? It's because it was tanking the market. But anyways, the sales on certain items have just been ballooning since the announcement of the tariffs earlier this month. Canned vegetable sales rose 29%, instant coffee went up 21%, ketchup was up 18%, beer rose about 3%. Also, during the same time frame, the items per transaction at both Walmart and Target moved slightly higher than it was in the weeks before. I even did a video on this as well, but even the new car sales rose by 9% year over year to 1.59 million units sold in March as people rushed to upgrade their vehicles before the tariffs took effect. And guess what? Even that panic buying with those cars was not enough to offset the crisis we are now seeing in the automotive industry. Now, it is estimated that some new cars could rise anywhere between $3,500 to $15,000 per car if these tariffs remain in place. Well, apparently a lot of the domestic automakers are pretty happy with this situation, as it will steer more Americans to buying American vehicles. But the truth is, Americans can't afford these vehicles with or without a price hike. So it doesn't really matter, in my opinion. Otherwise, they wouldn't be sitting on record levels of inventory if these cars were so affordable. Other items that people are panic buying are things like olive oil and coffee, because 97% of those items are imported. You got laundry, pet food, soap, toilet paper, almost anything that's non-perishable right now, and especially if it's imported, people are out there panic buying. Not everybody, but people who are terrified of the tariffs that may never actually materialize. And you know, I'm starting to wonder as I look at this whole situation, right? Like, we know that all these levers that are pulled in the economy are usually pulled for a reason, right? None of this is just a coincidence or by accident. So you look at this panic buying that's happening with the proposed tariffs, right? And what is that doing? That's giving a small little artificial boost to the economy, just like a stimulus would, right? Just like if they injected cash into the economy, because it is almost like an injection of cash when you tell people that, hey, prices are going to go up 25% across the board, let's say, just throwing out a number there, then essentially everything is on sale right now, because in a few months, then everything is 25% more expensive. So people rush out to buy, which gives the economy a small little hit of dopamine right now. So that could be the play from the playbook here. I don't know. It's just something that came to my mind as I've been thinking about the situation. But apparently more than 40% of Americans said that they are stockpiling or considering stockpiling right now with this situation going on. So that could be the strategy, guys. Let's get everybody out in the stores. Let's get them buying everything up. That's good for GDP. It's good for numbers. It looks like we're not in a recession. Sound familiar? Personally, I think the number one thing that people should be stockpiling right now is cash. That's what Warren Buffett's doing right now, because as we dive deeper and deeper into this recession, you are going to see assets go on sale. And it's already happening now with cars, even though it's not technically an asset, it's a liability. You get the idea. The more cash you have on hand, the more you're going to be able to buy with it as the prices continue to come down. And you can still get 4.5% in a CD account right now. And if you have extra money laying around, you might as well have it in there, earning some extra interest right now. And I know that's probably just barely keeping up with inflation, if not even slightly being outpaced by inflation. But still, it's better than nothing, right? And you'll still have a chunk of change sitting there ready to deploy when prices on something that you've been eyeballing come down in price. My opinion is focus on the big picture, guys. Focus on the things that move the needle, you know? You might spend a couple extra $100 a year on olive oil and imported food or whatever, different things you like to eat. But, you know, earning thousands of dollars a year in interest in a CD account ready to deploy when asset prices come down, I think is the smarter move. After all, Warren Buffett's doing it. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.